Good morning, everyone. This is Joe from New York Trading Room. Today is Friday, December 17. I took gold buy and let's wait and see.
The hell with taper. We're going to just stop. What would the market reaction have been? Is there an argument for having done that?
There is, Tyler, and I think the question that I asked of the chair was kind of in line with that, which is, hey, you're talking about inflation being such a big problem. You're continuing to buy bonds.
Yes.
You're going to buy them for the next several months. Why are you doing that? And he said, well, basically, we don't want the markets to freak out. That was the my paraphrase of the Fed Chair Powell's much longer and coded response. But that was the gist of what he said. And it's really to avoid a taper chance. And we're still trying to make that happen. Now, there's a legitimate question, Tyler. What does the Fed want rates? What does it want rates to do here? And it may be that it really wants rates to rise to tighten financial conditions to start to get a hold of the economy and inflation. But yields have gone nothing but straight down since the Fed started talking. They're actually lower today. And I think what's happening, Tyler, you led the show with this conversation, which is this battle in the markets between the weakness of Omicron and the Fed, which is going to be tightening. But it looks like the concern over Omicron is certainly dominating in the debate in the bond market right now.
I think that's what we're going to hear more about these next couple of hours, Steve, by the way, about Omicron and how central it is to the economic thesis. Steve, thanks very much.
Yeah.
Appreciate it. Have a great weekend. Whipsaw day for the markets as investors do weigh two key worries, inflation on the one hand, COVID on the other. But our next guest says you just can't sit on the sidelines during this volatility because yields on cash are negative, and a market high does not mean a market top. Joining us now, Emily Rubin, financial advisor at UBS Global Wealth Management. Emily, good to see you. You heard the Fed governor there saying that interest rates are likely to go up a few times. You think it's unlikely that the Fed raises rates in the first quarter?
Yeah, we actually think that the Fed, they're unlikely to take an aggressive inflation-fighting stance right away. We expect them to want to see how the economy looks as the pandemic continues, hopefully subsides, and also to see what it looks like after the taper is complete, which is now expected to be mid-March. So, we're not expecting an increase in Q1, but certainly, as we get closer to the second half of the year, the market is already pricing in 4 rate increases. It seems like it was originally May. It seems like it might be getting a little bit earlier, closer to March at this point. But the fact that the market already has that price in, we feel like that will help mute some of the market reaction if the Fed does make further announcements.
You know, there are lots of interesting things in my notes that you told our producers. One was that a market high does not mean a market top. I get that. I think you're also in the camp that says right now cash is trash. But if I'm leery of where the market is, should I continue to invest at these market highs, albeit not market tops? Should I continue to invest at market highs? And what does history tell us about the returns I might expect if I do invest at market highs?
Absolutely. I mean, as you said, a market high is not a peak. A peak implies that there's going to be a big decline. A market high is much, much more common. If you actually look back at data since 1945, the S&P closed at an all-time high, nearly 1/3 of the time. So that's pretty frequent. And investors who put their money in at those highs, more than 60% of them never saw a decline from the starting point of more than 5%. So it shouldn't be scary to put your money in at a high, but I understand where people are coming from. We have a lot of entrepreneur clients who had recent liquidity events. They have a lot of risk in their business.
Okay, 432, 472. Get ready to close it. 461. Just be ready to close it in any minute. 475.
Did I get that
Well,
right?
No, you're absolutely right. History will tell you that dollar cost averaging doesn't work. Going in as a lump sum outperforms 80% of the time, and that makes sense because the market goes
All
up.
right, we closed the first trade. I'm going long again.
In your approach and go in a bit more slowly, but it's a trade-off between likely financial returns and being able to sleep.
We're going to talk a little COVID in just a minute. We're sort of running out of time, but I note that you think that the first half will favor high growth, high inflation, good for cyclicals, financial, energy, global eurozone, and the second half look for healthcare a bit more defensive as the economy slows. Did I get that right?
Absolutely, and investors tend to be very underweight all of those areas after a whole decade of U.S. large cap growth stocks being the best performers. So we think it's a great time to diversify your portfolio.
Right. Emily, thanks. Interesting points of view. We appreciate it.
Thank you very much.
Emily Rubin. The number of COVID cases rising rapidly in some states. CDC Director Rochelle Walensky saying the Omicron variant is spreading very quickly, and the agency expects it to become the dominant strain in the United States in the coming weeks. Meg Terrell is here with the latest. Hey, Meg.
Hey, Tyler. So, of course, a big push for folks who are eligible to get boosters in the face of Omicron. Anybody not vaccinated, a big push, of course, for them to go and get their first shot. Meanwhile, we've got an update from Pfizer today on a group that hasn't yet had access to the vaccine, kids under 5. Pfizer now saying it's going to test 3 doses for all kids, those under 5 and those up to age 17. Specifically, though, we've been waiting on data for kids under 5, expected by the end of the year. And Pfizer said today that 2 low doses in ages 2 to 4 didn't meet the goal of a strong immune response that matches what we saw with a higher dose for kids and young adults 16 to 25. So they're going to add a 3rd dose there for kids under 5, as well as for those older age groups in the face of variants of concern like Omicron and even Delta. They say if the 3-dose regimen looks good, they could file with the FDA for ages 6 months to 5 years in the first half of 2022. So we're waiting to see if that's really a big delay from what we'd been expecting. It does seem like it's slightly pushed back, at least from some hopes or expectations of parents. They also increased their forecast for the vaccine for next year, $31 billion now expected in 2022. That's up from a previous forecast of $29 billion, and it's based on more orders set to be delivered next year. Pfizer also laying out kind of how it sees the pandemic playing out globally over the next few years. It calls 2022 still a pandemic year, 2023 a hybrid year, and perhaps reaching that endemic state in 2024. Of course, lots of variables go into that, and they say it could be different in different regions around the globe based on vaccine access, etc. But that's a little slower reaching endemicity than a lot of us had hoped. Tyler?
What a week it's been in the world of COVID with Omicron, with the word from the CDC on Johnson & Johnson's vaccine. Meg, you've been at the center of it. Thanks very much. Appreciate it. Let's stick with healthcare now. The sector seeing some nice gains over the past month, up more than 3%, significantly outperforming the tech sector, which is down 0.5% by comparison. And while the tech trade is falling apart, my next guest says it's tech within healthcare that is the big innovation play of 2022. Ricky Goldwasser is Morgan Stanley's head of U.S. Healthcare Services and Technology Research. Ricky, welcome. Good to have you with us.
Great to be here.
Nice to see you. Explain the thesis that favors healthcare right now. I mean, we kind of just did it with Omicron and COVID. There's a lot of people who are going to need a lot of healthcare, but explain why.
So when we think about healthcare and kind of like the transformation from within thesis, moving up the tech curve, so adding front-end digital capabilities to connect with consumers and data analytics to better manage risk is a really prerequisite for success. And we've seen the healthcare system going through major transformations in the last 18 months because of the pandemic, or at least turbo because of the dynamic of the pandemic, that we think are going to accelerate their transformation. So I often get from investors the question of the threat of big tech disruption has forced the large healthcare enterprises to rethink the old models.
Okay, guys, I closed the second trade. So the first trade we did 456, the second trade we did 114, and the total for the month 10,400. Like, you know, our target 15,000 every month. Just doing gold trade in first 15 minutes in London, then we move to Forex market. You can see we did 44,000 in last 3 months. From the beginning of the year, we did about 159,000. This is just trading gold, 15 minutes a day. First hour in London. If you have anything to do, to go to work, take your kids to school, do whatever you want of the rest of the day. If you have time, you can trade with us the Forex market after that. Forex market, we trade like 12 hours a day, and for last 2 years we did like 3,300, almost 3,030, 35, 335,000, which is good. And you can see for last months we did about 6,000. Last 3 months we did about 40,000. So that's it for today, and I will talk to you on Monday. Have a great weekend, everyone. Take care.